Welcome back to the Landlord Profitability Playbook series. I'm Chris McAllister with ROOST Real Estate Company, and today we're covering Profitability Play Number Six, Track Your Numbers. You cannot manage what you cannot measure. Your financial tracking system determines whether you're building wealth, breaking even, or slowly going broke. More importantly, it determines whether banks will lend to you and whether you can prove your success to anyone who matters. Download the scorecard linked in the description below, and let's walk through the 4 stages and see how well you're really tracking your real estate business. If you're in the reacting stage, your rent is often paid in cash and your income and expense records are incomplete. You may be a good credit risk, but you cannot prove it. This is a dangerous place to be financially. You're operating your real estate business like it's a hobby rather than a legitimate investment. Cash payments might seem convenient, but they create a paperwork nightmare. You probably have a shoebox full of receipts, maybe a basic checking account for property expenses, but no systematic way of tracking income and expenses. You know roughly how much you collect each month and roughly how much you spend, but you don't have detailed records. When tax time comes, you scramble to piece together your records. You're probably missing deductions because you can't find receipts or forgot about expenses. You might even be paying more taxes than you should because your record keeping is so poor. The biggest problem is that you cannot prove your income to lenders, which severely limits your ability to grow your portfolio. Banks want to see detailed income statements and tax returns that clearly show your rental income. Without proper documentation, you look like a risky borrower, even if you're actually doing well. You might be a good credit risk with solid properties and reliable cash flow, but if you can't prove it on paper, banks will treat you like you're high risk. This keeps you stuck with your current properties instead of expanding your investments. In the surviving stage, you have the information you need to file your tax returns, but have no idea what your ROI is or how you are doing financially. You've improved your record keeping enough to satisfy the IRS, but you're still operating in the dark when it comes to the real performance of your investments. You can tell your accountant how much rent you collected and how much you spent on repairs, but that's about it. You don't know if property A is more profitable than property B. You don't know if your returns are better or worse than stock market investments. You can't tell if your rental business is actually building wealth or just keeping you busy. When people ask how your real estate investing is going, you give vague answers like pretty good or it's going okay because you honestly don't know the specifics. You feel like you should be tracking more, but you're not sure what metrics matter. You might suspect that one property is a better performer than another, but you can't prove it with numbers. You make decisions based on gut feelings rather than data, which means you might be missing opportunities or making costly mistakes. This lack of financial clarity makes it impossible to make strategic decisions about your portfolio. Should you sell a property, refinance, buy another one? You're guessing instead of using data to guide your choices. If you're in the muscling stage, you are confident that your books and records are in order and you are receiving all benefits due you at tax time. You've developed a solid system for tracking income and expenses, and you're confident you're not leaving money on the table at tax time. You know about depreciation, you track your mileage, and you're claiming all the deductions you're entitled to. Your record keeping is organized enough that tax preparation is straightforward rather than stressful. You have systems in place to track receipts, categorize expenses, and maintain documentation that will satisfy an audit if necessary. You're muscling through by being disciplined about your bookkeeping. You might be using spreadsheets, basic accounting software, or working with a bookkeeper to keep everything organized. You've learned the importance of good records the hard way. The challenge is that while your records are good enough for tax purposes, you're still not using them strategically to optimize your business. You're tracking what happened, but you're not analyzing trends or using the data to make better decisions. You know you're compliant and organized, but you're not leveraging your financial data to maximize profitability or growth. You're working hard to maintain good records, but you're not working smart to use those records to improve your returns. In the succeeding stage, you receive an income statement with detail by property each month. You measure your profitability against your plan, and your banker won't stop asking you to lunch. This is where your financial tracking becomes a strategic advantage. You don't just know what happened last month. You know how it compares to your budget, your goals, and your historical performance. You can see trends and make adjustments before small problems become big ones. You receive detailed reports that break down income and expenses by property, so you know exactly which investments are performing and which need attention. You can calculate ROI, cash-on-cash returns, and other key metrics that guide your investment decisions. Your banker loves working with you because you present professional financial statements that clearly show your income, expenses, and profitability. When you want to expand your portfolio, you can demonstrate exactly why you're a good investment risk. You track your performance against your business plan, so you know if you're on track to meet your goals or if you need to adjust your strategy. You can make data-driven decisions about rent increases, property improvements, and portfolio expansion. Most importantly, you use your numbers proactively rather than just tracking them. If one property is underperforming, you know exactly why and can take specific action to improve it. Your financial data guides every major decision you make. This level of financial sophistication separates you from amateur landlords and positions you as a serious real estate investor that lenders, partners, and professionals want to work with. So be honest. Do you know your exact ROI on each property? Can you prove your income to a lender? Are you making decisions based on data or gut feelings? Your financial tracking system is the foundation of everything else. Without good numbers, you're flying blind in a business where precision matters. Next up is Profitability Play Number 7, Build a Self-Managing Team. Keep scoring yourself as we near the end of our series. Thanks for watching, and I'll see you in the next video.